Hello. If you are working in sustainability, ESG reporting, carbon accounting, or greenhouse gas verification, then there is an important update you need to know. Most professionals are already familiar with the ISO 14064 Part 1, Part 2, and Part 3. There is a detailed video in our channel. If you want, you can see this. But recently, two new additions have been introduced into the ISO 14064 family, that is ISO 14064 Part 4 and ISO 14064 Part 5. What exactly do these new standards cover? Do they introduce Scope 4 and Scope 5 emissions? Do they replace the existing carbon accounting framework? And why these standards important for ESG consultant, GHG verifiers, industries and carbon markets? Hello everyone, welcome to Clean Copper Talk. So in this video we will discuss evolution of ISO 14064 series, ISO 14064 Part 4 in detail, and ISO 14064 Part 5 in detail, applications in ESG reporting, implications for GHG professionals, and future directions in carbon accounting. So stay till the last. Before discussing Part 4 and Part 5, let's briefly revisit the ISO 14064 framework. The ISO 14064 is an internationally recognized standard developed for greenhouse gas accounting, reporting, validation, and verification. Traditionally, the framework consisted of three parts: ISO 14064 Part 1, ISO 14064 Part 2, ISO 14064 Part 3. The Part 1 discusses the organizational greenhouse gas inventories, and it includes Scope 1, Scope 2, and Scope 3 emissions. The Part 2 deals with the project level emission reductions, while Part 3 gives guidelines for verification and validation of GHG emission statement. So, climate disclosure requirements are evolving rapidly. Companies are now expected to disclose greenhouse gas information under the framework such as IFRS S2, CSRD, ESRS, CDP, SEC Climate Disclosure Rules, BRSR in India. As reporting obligations increase, organizations need more detailed implementation guidance, more standardized verification procedures, greater flexibility for remote assessment, more confidence in digital data systems. These challenges motivated ISO to expand the ISO 14064 family. The result was ISO 14064 Part 4 and ISO 14064 Part 5. These documents enhance the usability of existing standards rather than creating entirely new accounting systems. ISO 14064 Part 4 was published in 2025 as a technical specification, officially known as ISO 14064 Part 4. Its objective is straightforward. It provides practical guidance for applying ISO 14064 Part 1. Think of it as an implementation handbook. While ISO 14064 Part 1 tells organization what needs to be reported, ISO 14064 Part 4 explains how to do it effectively. The major topics covered under the Part 4 are organizational boundaries. One common challenge in carbon accounting is deciding what should be included within the inventory. Part 4 provides additional guidance regarding operational control approach, financial control approach, equity share approach, subsidiaries, joint venture, lease asset, and complex ownership structures. Identification of emission sources. Organizations often struggle with identifying indirect emission. Part 4 provides practical recommendations for purchased goods, business travel, waste treatment, upstream emission, downstream emission, transportation activities, and supply chain emission. Data quality management. A greenhouse gas inventory is only as reliable as the underlying data. ISO 14064 Part 4 emphasizes data completeness, consistency, transparency, accuracy, traceability, documentation, and uncertainty assessment. Quantification methodologies. Part 4 discusses best practices for selecting emission factor, calculation approaches, monitoring techniques, measurement protocol, data collection system. Organization can improve inventory reliability by applying these recommendations. Reporting requirements. Part 4 also offers guidance regarding inventory documentation, reporting formats, disclosure assumptions, recalculation procedures, baseline adjustment, record retention. These recommendations are particularly useful for companies preparing as reports aligned with CDP, IFRS S2, CSRD, BRSR, net zero commitments, scientific-based targets. Important clarification: a common misconception is that ISO 14064 introduces Scope 4 emission. That is not correct. ISO 14064 Part 4 does not create a new emission category. It only strengthens implementing the guidance for organizational GHG inventory. The internationally accepted emission framework remains Scope 1, Scope 2, and Scope 3. So what about ISO 14064 Part 5? ISO 14064 Part 5 was published in 2026. Its title is Guidance on Activities and Techniques Used Remotely in Conducting Verification and Validation of Greenhouse Gas Statements. This is a highly relevant development because sustainability assurance is becoming increasingly digital. Traditionally, verification required physical site visits. Auditors traveled to facilities, documents were reviewed on site, measurements were physically observed. However, today verification is challenging. Digital technologies now enable remote assessments. ISO 14064 Part 5 establishes guidelines for emerging approaches. Examples for remote verification tools include satellite images, remote sensing, drone inspections, digital monitoring system, cloud database, video conferencing, smart meters, Internet of Things devices, electronic document review system, GIS platforms, blockchain-based data management. Why is remote verification important? There are several reasons. First, it reduces the verification cost. Organizations with multiple facilities can undergo assessment without extensive travel. Second, it improves efficiency. Auditors can review data faster. Third, it enhances accessibility. Experts from different countries can participate in assurance engagements. Fourth, it reduces the carbon footprint associated with auditor travel. Ironically, traditional verification activities themselves generate greenhouse gas emission. Remote auditing can reduce these impacts. Risk management considerations. Part 5 also recognizes certain limitations, for example, data manipulation risk, cybersecurity concerns, incomplete visual evidence, internet connectivity challenges, limited physical inspection capability, data authenticity issues. Therefore, ISO 14064 Part 5 encourages organizations to establish procedures for data validation, chain of custody, evidence management, digital security, quality assurance, and auditor competence. Industries likely to benefit: energy companies, manufacturing industries, multinational corporations, supply chain auditors, corp- carbon credit projects, consulting firms, ESG assurance providers, verification bodies, and certification agencies. Does ISO 14064 now include Scope 4 and Scope 5? This is probably the most searched question today. The answer is no. ISO 14064 does not officially recognize Scope 4 or Scope 5 emission. Only Scope 1, Scope 2, Scope 3 remain internationally accepted. However, researchers have discussed the concept of Scope 4. Scope 4 is often referred to as avoided emissions. These are the emissions reductions enabled by a product or technology. For example, electric vehicles replacing conventional vehicles, energy efficient equipment, renewable energy technologies, smart grid, water reuse systems, carbon capture technologies. Although these concepts are valuable, they have not yet been formally incorporated into ISO 14064. Similarly, there is currently no globally accepted definition for ISO for Scope 5 emission. Several organizations have proposed interpretations, but these remains conceptual discussion. Therefore, organizations should continue using established reporting frameworks based on Scope 1, Scope 2, and Scope 3. Why these standards matter for ESG professionals? For sustainability professionals, ISO 14064 Part 4 and Part 5 represents important evolution. They can help organizations improve GHG inventory quality, increase transparency, strengthen assurance processes, reduce verification cost, enhance digitalization, support regulatory compliance, improve investor confidence, facilitate ESG reporting, prepare for further climate disclosure requirements. For professionals working in carbon accounting, environmental consultancy, sustainability reporting, ESG assurance, GHG verification, climate risk assessment, these standards will likely become increasingly important over the coming years. Therefore, ISO 14064 continues to evolve alongside global climate governance. Part 4 focuses on better implementation of organizational greenhouse gas inventories. Part 5 addresses the future of digital and remote verification. Together, they make greenhouse gas accounting more practical, more transparent, and more adaptable to modern sustainability challenges. As climate disclosure regulations continue to expand, understanding these emerging standards will become an essential skill for environmental engineers, sustainability consultants, carbon accountants, and ESG professionals. If you found this video useful, please like the video, subscribe to Clean Copper Talks, and let me know in comments whether you would like a detailed video on Scope 3 emission. Thank you for watching. See you in next video. Till then, tata, bye bye, take care.